Seeing a bit of a rebound in the futures right now after that huge sell-off yesterday, $1 trillion in market cap value lost. What's your word of the day? How do you see today shaping up?
The word today is Jevons, as is Jevons paradox. We're all learning about this. Microsoft CEO reminded us of it yesterday, that as costs come down, as efficiencies grow, the adoption, demand, and consumption does continually rise. You know, think about when Apple first announced the 2GS computer. It cost about $4,000 or $5,000 for a household to buy a personal computer. As efficiencies in computers got better, we actually sold a lot more computers, and it was better for the computer industry. And so most everybody on the tech side was saying this is a good thing that's happening. Not fun yesterday in stock market, let me clarify that. But overall, technological advancements are a good thing. And if this is the Sputnik moment, that, hey, oh my goodness, we're in competition and they aren't terrible about what they're doing with AI in China, we responded very well to Sputnik. We had space dominance. And so I look at this and I say, yes, was it a wake-up call? Did it fundamentally shift absolutely everything about the AI and power story? In my opinion, no.
All right, so it didn't shift everything in your mind. Did it shift some parts of the market, specifically chips? We saw that huge sell-off when it comes to NVIDIA yesterday, almost $600 billion. We are seeing a rebound yesterday, but if these claims are true, and it's a big if, that they were able to develop DeepSeek with less advanced NVIDIA chips, doesn't it change that part of the story?
Part of the story. So that's the training part, but then you actually have the inference and the actual usage of AI, which does still take a ton of compute power. So you're going to shift exactly where the chips are going to be used. If we have a much faster adoption of AI, because these models are cheaper and more readily accessible to everybody, companies, individuals, then we're going to see more need on the compute side for actually running an inference and using the AI models versus the compute needed just for the training. The compute for training was what this was all about. And if it does lower costs, it lowers significant barriers and it makes it more accessible. But that still means we actually have to run all this. We still have all our cloud computing we need to do. I don't necessarily see chip consumption going down. It's just shifting where these chips are going to be used for, just for training, or now they're actually going to be picked up for utilization. There absolutely could be a period of disruption as markets are readjusting trajectory. But it didn't seem NVIDIA was upbeat about this. Again, most of the tech CEOs were saying technological advancement is a good thing. This isn't a huge threat to us. This is going to make everything happen faster.
All right, let's see if you're putting your money where your mouth is, Vicky. What's your pick for us today and why?
It's Meta. If anybody is using AI the best, it's Meta. They're actually figuring out how to monetize it and make money off of it. So now if they don't necessarily need to spend $65 billion on training new AI models, they can build a better mousetrap per se. Then there's more money for them to spend on enhancing their platforms and continuing to increase integration and social media presence and have their users are about what, 25% of them are using their AI. So for me, I look at this and say, maybe they're not going to spend 65 billion on the data centers, but I tend to think they're still in an arms race and they're going to be hesitant to pull capex. But I think they're going to do 48 billion in revenues, 28 billion in net income, and just absolutely crush earnings Wednesday.